when you're looking at the offering memorandum, what you need to remember is there are two sets of things. There are quantitative things and there are qualitative things, and you have to tie them together. And what it means is, let's say the project says, oh, you're going to get a 15% IRR. So what? That IRR alone is pointless. It means absolutely nothing.
Yep.
You have to look at the cash on cash. You have to look at the equity multiple. Yeah. You have to look at the strategy. And then when you look at the strategy, look at the underwriting presented.
This is the Multifamily Journey Podcast, show 25.
You're listening to the Multifamily Journey Podcast. In this show, you'll hear industry experts share tips of success and failure from their real estate investing journeys. You'll get a transparent look behind the curtain while you learn to fulfill the lifestyle you want to live and achieve your wealth goals. Get ready for the journey to financial freedom through investing in multifamily real estate. Here's your host, Blake Dailey.
Hey, what's up, everybody? Welcome back to the Multifamily Journey Podcast. This is your host, Blake Dailey, and excited to bring another episode to you today. It's been a whirlwind of a week. I tell you what, the last couple of weeks, really, I've been working on 3 acquisitions now. There's a third in the mix, an LOI on a 48 unit. So that's on top of the 66 unit in North Carolina that we're about to close in a couple of weeks. That deal is really exciting as a first one. Super excited about it. And then the 8 unit here close to me in Fort Walton Beach, actually got all the money I needed for both of those deals, closed them out. One person fell out, which made it stressful. So had to go find more. Tip there is always raise more than you think you need. And I learned that the hard way because I was stressing out the last couple of weeks, but got those 2 figured out and should close on the 8 unit on Monday, unless anything with title holds it up. So we'll actually be beginning that rehab on Tuesday, which is like 6 days from now. So that's kind of crazy. That's going to be a big rehab. It's going to take at least 3 months. So it'll be good stuff though. Really good deal. Got some really awesome people partnering with me on it. And I'm super excited for both of those. And then as all that is happening, got an LOI accepted on another 48 unit, which also looks really good. So the good deals keep rolling in, good enough to do anyway. And I'm excited. I feel like I'm growing gills from my head being underwater, maybe in over my head a little bit, but partnered with awesome people, got great people in my corner that are helping out. And I think that's what is most important in this business, right? Is learning what you need to be able to go out and take action and then surround yourself with the right people. So because of that, pressing on and continuing, and it's been fun and stressful and exciting and learning a lot. And yeah, all this at once. So it's been a whirlwind. But about today's show, enough about me. Today's show, we got Alina Trigub. She was an awesome guest, provided great value. She shared her story of how she started out in the Soviet Union, immigrated to the United States like 30 years ago, and since then has really lived the American dream. And how she got into real estate is really cool because she got a really good accounting degree, was working with one of the big 4, and her taxable income just kept rising and rising and rising as she promoted and was doing well in her career. And she was looking into real estate as a way to get tax advantages and take home more of what she made. And that led her into passively investing in real estate. And then she learned the skills to be able to put deals together and take money to other deals to help other passive investors achieve the same thing she had to figure out on her own. And now she's doing really cool investments in self-storage and mobile homes, and all these alternative assets that are in multifamily, but that are related to multifamily. That's where she does a lot of good stuff at. And we're going to get into all of that. So I think you're really going to like it because it applies to multifamily. It applies to things related to multifamily. And then she's just really, really good at what she does, provides value. And I think it's a good show. So with that, let's get into the show. Alina, this is awesome to have you here. Welcome to the show.
Thank you, Blake. I'm excited to be here.
Yeah, this is going to be a good topic today. But before we get into it, why don't you tell people a little bit about yourself and your real estate journey so far?
Earlier today, I was at another networking meeting, and they said that instead of doing regular introduction, just tell us a story. So I
like that.
They kept it at 2 minutes. So I said, okay, I'll try to fit into my story into 2 minutes. So if you want, we can do that, or I can do a little bit more expanded version. But yeah.
Let's hit the 2-minute overview, and then we can kind of break apart where we need to.
Sound good. So my journey started when my mom and I immigrated to the United States, which was almost 30 years ago. And I was looking to decide what do I want to do. And at that time, I didn't really have a degree yet. I was a transfer student. So I decided to go for a degree in accounting. And while going to school, actually, my mom decided that she wanted to have education here in the United States, even though she had the bachelor's already from Soviet Union where we came from. So we both decided to go to school at the same time. We worked a bunch of odd jobs here and there and just barely survived, but concentrated on getting that education. So I got my degree in accounting, started doing taxes, never really liked it, and decided that I wanted to switch. So I found a way out and moved into the information technology field, where I spent 20 years, and my career progressed. And so were my taxes. They also kept progressing for some reason. So as a former tax,
a funny way of doing that. They just keep creeping up.
Yeah. I mean, my career was progressing, and those tax brackets kept rising up, to 15, 20, 25. I mean, I don't remember the thresholds, but I know the highest has been 37 or 38 in the past. I don't know what's going to happen this year with the new administration, but it's been pretty high. And so I kept thinking that I need to find a way to lower taxes. It's been so high, and real estate kept coming up. So I finally decided to take action and started reading and researching real estate investing. And by chance, I came across the world of syndications, and that seemed like a great area to start investing. So I started investing. I found a syndication that made sense, and I invested in one as an equity partner, and then another, and then another. And you know how it works, like with that trickle down effect, they just started popping up from all sides. So I've invested in a bunch over the years. And as I was talking to friends, family, coworkers, and sharing what I was doing, people were like puzzled. What is that syndication thing? I realized that most people never heard of that word. And when I started explaining that this was a way to make passive income, save in taxes, make positive impact on the communities, people were curious, and they also wanted to make money that way. So I realized that there was a huge gap, and I decided to fill in that gap and essentially help other people follow my footsteps and help people to start investing in real estate passively, start making that passive income, save on taxes, and make that positive impact on the communities. So that's what my company, SAMO Financial, is about. We bring passive investors with us into the project, and the project, while they're mostly within commercial real estate, they vary from apartments to mobile home parks to assisted living and so forth. And we're very happy, and we get repeat customers. People follow up. People continue investing with us. So it's been very rewarding. And
that's cool. So basically, what you do is find awesome opportunities and bring passive investors into those investment opportunities, because that's what you were doing before anyway. So you got all the knowledge, expertise, and know how to find the deals, or find the right people with the deals, and then bring a bunch of money to those.
Correct. Yeah, and finding opportunities takes time. It typically
it takes relationships. It's
building relationship. It's not overnight. So a lot of folks don't realize that, but real estate is all about relationships. So it takes time to get to the point.
Yeah, I said that all the time. Like, without the other people, I definitely wouldn't have, a third of the deals that I've done without the help of others. So that's really good. But I love this story because it's one of, a daughter and her parents immigrating to America, following the American dream, finds a niche that they're really good at, and just dive into it. And I love that. So, and it all started, it sounded like, when you were paying really high taxes, and that's like a big draw for high income earners to invest in commercial real estate, because you have really big purchase prices, therefore really big depreciation when you do the cost segregation study, and then they can offset their earned income with the depreciation. So that's really cool that you just found that naturally and started investing to decrease your own taxes, and then said, hey, wait a minute, I think I'm onto something. I'm going to start, bringing other people, and just through conversation. So, and you said it's all about relationships. Like, how did you start those relationships to get into it? Because I think that's where a lot of people struggle, or, get like maybe have hiccups in the beginning, because they just I don't know, maybe don't have the confidence yet to start doing these kind of things?
Yeah, no, absolutely, Blake. That's a great question. I was actually in the same boat as these people. I was not confident originally. I was really shy. And what I started doing, I started going to meetups. And at that time, meetups used to be in person, believe it or not. And we still didn't have to wear masks, believe it or not. So those were the good times.
Going without the mask.
Yeah, tell me about it. So I was sitting in the corner, observing what other people are doing. And over time, I realized that a lot of folks that were speaking maybe had expertise in one area, but didn't have expertise in another. And I had that, golden opportunity to share my expertise, that tax background and experience that I had. So I started networking, just started talking to people. And over time, I realized that I wanted to expand the reach and bring my message further. So I decided to start my own meetup, which I did, but not only in one location. I'm in New Jersey, bordering New York City. So I started 2 meetup groups. One was in the city. One
I like that. One wasn't good enough. Let's start 2.
Yeah. So I started 2, and it was amazing, bringing folks together, networking, bringing presenters. It was amazing. I had to combine them into one virtual meetup. So ended up with one this past year, 2020. But hopefully once we go back to meeting in person, we'll split again and have 2 meetups again, and we'll continue meeting in person. But essentially, it's all about start talking to people and sharing what you know. And when you share your expertise, even on a podcast interview like yours, when you share your expertise and someone enjoys what you have to hear, people will start reaching out. Those that have events will start inviting you to those events. And
wait a second. You're telling me that you don't have to build a rocket ship and fly it to the moon to find like multifamily deals and commercial real estate deals? You can just like network with people and learn over time, and it just happens?
Well, yeah.
Well, it doesn't just happen, but I think the point is that it's not rocket science.
Exactly.
That was a loop-de-loop way of saying that. But I think like when you listen to this podcast, like after all the interviews I've done, or if you listen to other shows, there's common traits of all these people that find success. And a lot of them, they're common pathways. Everybody has a unique one, has their own story, but there's common things in the journey of all these successful real estate investors or, entrepreneurs and business people in general. And it all starts, or it seems like in real estate, at least, that it's like they go to meetups, they meet the right people, they network, they build relationships, and over time it produces fruit. So I just want to say, like, for those listening, if you're not going to those meetups yet, yes, COVID's a thing, but so many people have started online meetups now, and you can network. I was just at one today, like on my lunch break. I was at noon on a group Zoom. Somebody was having one online. I showed up, networked, met some new people, and that's how you build it. So I love that. That's how you started out.
Yeah, it's amazing. We now have people from West Coast, even though I'm on East Coast. We have people from West Coast joining us. One time we had an international investor join us, so that was incredible. I mean, just the power of connecting online is absolutely incredible.
Yeah, and even if you're not ready to do deals yet, like just the education you get from that, because you get the ideas of others, you get to see the success and hear the stories of others that have done exactly what you want to do. So, man, that's such an important tip. Like, get involved, like meet people and go out and get active in this like real estate investor community, because that's where the magic happens. So
Very
that's
true.
Cool. Yeah.
Very true. So it's one thing to listen to someone's interview on a podcast. It's completely different thing when you join the meetup and speak to that person face to face. It's a completely different experience. So I highly recommend people to start networking.
Yeah, I like that. So what I want to do now is get into kind of some of the investments that you're doing. And just to get into it, you're not only focused on one niche in commercial real estate, right? It's not just multifamily.
Correct. Yeah. We invest in various assets that make sense for us or in our community. Okay.
So I guess, can you just give an overview of like all the assets you're in or pursuing and looking at, stuff like that?
Sure. So far, we are in assisted living, multifamily space, mobile home parks, and self-storage within commercial real estate.
I like it. Yeah. So that's a pretty diverse group of investments, but this being the Multifamily Journey podcast, they're all multifamily related, all, operate pretty similarly, but it seems like those are kind of maybe more businesses than traditional multifamily. Like, do you see it as that? Or where's the difference lie for you?
Some of them have a business aspect. I mean, mobile home parks are very similar to multifamily. And the idea there is that the housing, regular apartment housing, may be unaffordable for a lot of people. So they choose to live in the mobile home parks. And other people just prefer to downsize in the cases of a lot of the seniors. Let's say, for instance, they want to live in a warmer climate in a tax-free state. And Arizona is a perfect example of that. Mobile home parks are just a lot more affordable. And they, being seniors, they don't really need a lot of space.
As far as housing goes, it doesn't get much more affordable than mobile home parks, which is good, right? You're serving a need of a certain chunk of the population.
Exactly.
Yeah.
So that works well.
Mobile home parks and self-storage are like cyclical, right? Like meaning that in a recession or in a downturn, they normally perform the same, if not better, because people are coming out of, different asset classes and coming down to mobile home parks because, that's what's the most affordable, or like they're moving out of their big houses and they got to store their stuff. So of course they go put it in, in a storage facility. Have you seen that?
Yeah. It's very common these days. Storage has been in a huge demand. Of course, a lot depends on the geographic areas, but essentially areas that have a lot more apartments or a lot more houses. Again, Arizona is a great example where the houses don't have basements. People typically need additional space to store their stuff. So that's where storage comes in.
Yeah, I know I do. Like we bought a house with like an extra storage shed and a big bay garage and like 2 bedrooms we don't use and like closets all over the house, and we're still running out of space. I don't know where all this stuff comes from. So I know if other people have half as much stuff as me and my wife build up, they'll need some storage. So man, so when you're looking at these different asset classes, whether it be mobile home parks or self-storage, what is it that you look for in opportunities? Like it's probably different in each one, but what are some things that you look for?
Absolutely. So the first and foremost, I look at the operator, their track record, their expertise, how long have we been building relationship with them, what is their strategy, how are they planning to implement that strategy, why are they looking at specific geographic area, what are they looking in that geographic area, and whether they implementing the same strategy over and over for identical asset class, or whether they're going all over the place with that strategy. So that's also very important.
So for you, the team is one of the most important things, like to make sure you're bringing capital to the right group.
Yeah, that's definitely that's step number one, to look at the team as a whole. If they operating as a cohesive team, if they're delivering on what they're promising, and if this is the team with which we would want to enter into marital engagement, if you will, because this project may last 5, 7, 10 years, who knows. So if we want to enter with them into that professional marital relationship for that time and be with them, and if we trust them to perform.
Yeah. I think that trust is paramount. It comes back to like how relationships are so key in this business, right? It's like everything's built on the right relationships because your investors are trusting you to make the right decisions, and you're trusting them. So it's like this chain of trust, if we'll call it that.
Absolutely.
Yeah. So as far as the deals themselves, like why do you go with those alternative asset classes and not true multifamily? What attracts you to those as opposed to, buying apartment complexes or something else? Because it's something that it intrigues me. I've been looking into it, but I can be like the guy with suffer from shiny object syndrome very much myself. So I try to just stick to one thing, but I'm always interested in others.
Yeah, no, absolutely, Blake. The main idea is diversification. Just like I always tell people, don't put all eggs in the Wall Street basket. Same here. I tell them, don't put all eggs into one basket and invest in one asset class or one location. You may be in multifamily, but you may be investing in a multiple geographic location. That's a diversification right there. For us, we look beyond that, and we also talk to our investors a lot, and we realize that a lot of investors are looking for that diversification because they want to have some sort of hedge against volatility. And when they expressed interest in looking for something beyond apartments, we started looking what other asset classes are recession resilient, more or less, because there's nothing that's recession proof completely. So what are we looking for? We're looking for the assets that can sustain for economy, that can get through the recession and can still deliver and produce income. And those are the asset classes that are essentially in demand during the recession. And as you mentioned, the two asset classes, storage and mobile home parks, are counter-cyclical, so they come in perfectly into here. When it comes to assisted living, if you look at the statistics nationwide, the senior population continues to grow. They tend
baby boomers.
Yeah, I mean, they tend to move to a warmer climate, like where you are,
Yep.
Florida, Arizona, North Carolina, and so forth. They also look for warmer and tax-free climate. And again, it's probably not nationwide, but in specific geographic locations, senior living facilities perform quite well. So that's what we look for. We look for a location that is specific for an asset class that we're investing in, and then supply and demand. If there is not enough supply and we can fulfill that demand, then we'll go for it.
Yeah, I think that runs true. Like whether, no matter what asset class you're in is, first knowing your market, knowing the supply and demand in that market, because I know a big thing in like self-storage is like the available feet per person in that market, right? So if there's a lot of available square footage per person, then there's not going to be very much, or there's a lot of supply, so there'd be low demand. So it's finding the right locations based on that. So yeah, that's all good stuff. We had Prashant on the podcast a couple of weeks ago, and he was saying how he's getting into assisted living now. And we talked about that a little bit. So I think that is another one of those asset classes that kind of intrigues me because it operates similar to multifamily. And I see it here, especially in Florida, because there is like an aging population and everybody retires to Florida. And just down the road from my house, there's like this block of really nice looking multifamily, but it's senior assisted living. That's like some of the best units in like around my area. So it looks like they're doing pretty good, at least from the outside looking in. Yeah. For you, do you think it's more important to find that good deal, or for you and your business, is it more about developing the relationships with investors and finding the money?
For me, it's more about my investors, of course. The deals can be common, and they are common on a continuous basis. But we probably go through hundreds before we find that one that makes sense for our investors. And another point to keep in mind, the deal can be a good deal, but it may not be the right deal for a specific investor audience. So I tend to cater the deals to my investor audience. I know what they're looking for, and I tend to look for the deals that will work for our investors, because I want to make sure if I'm offering it, it's something that our group will benefit from and will want to invest with us.
Yeah, that's good. What I want to ask is like, how do you go about raising the capital from those investors with that wider range of criteria? And I think it's be important for like somebody listening, thinking about getting into one of these asset classes. Like, how do you say like, we're going to go do this, or look for this or this, and still raise capital all the same?
Sure. So it all comes down to keeping consistent communication with investors, whether it's scheduling a call with them or a Zoom call, meeting in person, or potentially exchanging emails or text, whatever way of communication works for your investors and you. And just interacting, getting a sense of where they are, what they're looking for, what they want to do. And on top of it, educating them. For instance, we initially spent a lot of time in multifamily, and we had a lot of multifamily projects, and that was fine and good. And people kept coming back and investing with us in multifamily. But the more and more of multifamily projects we got, the more feedback was provided that, hey, what about looking at other asset classes? Do you have anything outside of apartments? And that's what triggered me to start looking and researching other asset classes. And, at first I uncovered mobile home parks for myself, and I took some time to do the research, to understand how that asset class works, to understand the pros and cons of investing in mobile home parks, and really get an idea whether it's something that will work for us, to stress test it, if you will. And I realized, that was another great asset class for us to consider, and started bringing investments to our group. And same applied to other asset classes. So it's essentially It comes down to doing research, due diligence, speaking with other investors that are operating in this specific space, and then deciding for yourself, do I want to forward with this asset class or not? And then educating investors. That's very critical component as well, because like you said, people may know or may have heard what self-storage is, but they don't really know all of the pros and cons of that asset.
Yeah, that's good. So essentially you're doing research, you're developing the strategy or the business plan, if you will, and then taking that out to investors, having conversations, educating them, and then it's raising the money. So it's not just saying, hey, I want to invest in mobile home parks. Do you too? It sounds like there's some work up front with it, and then ongoing, which is big in this business overall, is educating investors. So I'm glad you mentioned that, and I want to dig into it a little bit. So when you're getting in, saying if you've got a new opportunity, so you started out, you said in multifamily, and then the mobile homes, and then the self-storage. Mm-hmm. So how do you go about educating those investors? Like, hey, I'm doing this now. Do you still want to invest with me?
Sure. So I start by doing my own research and understanding the risks and implications of a specific asset class and all of the pros and cons. And then based on my research, I put together articles, and I now started putting together educational videos, which I share with my audience, in which I explain how which specific asset class operates, what's it about, what are the pros and cons of investing in one, and then answer any questions that investors may have overall about the class. And we're actually planning to go further this year with diversification. The plan is to start our own funds and offer a further diversification to investors by bringing the projects into the fund from different asset classes and obviously from different geographic locations.
So then you'd be raising money into one fund, and Correct. Then from that fund investing in different asset classes. So that fund is well diversified with all these different assets. I like that a lot. So far, have you just been doing it like syndication by the deal? Like you raise money for each specific deal?
Correct. Okay. Correct. Yeah.
That's good. I think that's where, for those listening, it's just, a little nuance there. Most of the time when you start raising money, you find the deal and then raise money for that deal. And then as you get, you can start it with a fund, but as you get more advanced, then you usually go to the fund, and then you just raise money for essentially the avatar deal that you're looking for. And then once you have that fund filled up, you go out and invest in that deal or multiple deals, right? And then all the money that fund makes comes back to investors rather than just one deal. So it's a way to diversify within real estate, which is really cool. So I like that you're doing that. I've toyed around with that idea as well.
Yeah, no, it's also a great way to hedge against the volatility. So for instance, if someone is brand new to real estate and they're looking at multiple deals, and whether they're in multifamily or storage or another asset class, they're not sure whether to invest in them or not. So here is an opportunity to invest in a fund that will have a piece of every very different opportunities, and it will help them to hedge against any risk that each of these projects may have by balancing out.
That's good, because then if one deal does poorly, they have other deals within that fund to spread it out, so they're not losing your investment. And that's probably big with like most common investors that aren't accredited, that just have, they know they want to get into real estate and they have enough money to get in, but if they lose that money, it'd be a kick in the shorts, So
that's good. Yeah, and that's why I always say, let's say hypothetically you have 100,000. Do you want to invest in two single project deals, or do you want to put that 100,000 that invests in 10 projects at the same time?
Yeah.
Where your money
naturally you're going to be more diversified and more secure with 10 deals because it's spread out. So
exactly.
That's good. Yeah, that's good. I know, just from doing research beforehand, that educating passive investors is a big passion of yours and a big focus for your business. And I think this is a really timely question with everything we've been talking about. How do you, or what would you say are some things that are most important to educate the passive, any passive investor on upfront, like as the relationship with them starts?
Sure. So first of all, the first step is to make sure that investors understand what they're getting themselves into. What's commercial real estate? What's syndication? What is all of the terminology within syndication means? Make sure that they know how to read and understand offering memorandum. And beyond that, provide further education. So when you have a specific project, and again, the project could be a single deal or a fund of funds, it doesn't really matter. Do a webinar and explain everything live in that webinar about your project, why you selected this particular location, why this asset versus another, who is the team, what kind of track record the team has, what are they doing, what is the strategy, what kind of returns you're projecting. And one of the most important things to talk about are the risks. What are the risks associated with this project? And what's even more important is, how are you planning to mitigate this risk? So you have, let's say, these 5 risks. How are you going to mitigate them? If, let's say,
that's really good, because I think when people start out, right, they want to pitch their idea and not talk about risk because it makes their deal look worse. But just like you're saying, if you point those risks out and then show your plan to deal with them, not only does that show investors that you're squared away and have thought about all the different ways this could go, but you have a plan in place to mitigate risk and keep their capital safer, which, you know, if you know anything about like behavioral psychology, that people are much more likely to act to avert a loss than to like achieve a gain. So people don't want to lose money more than they want to make money, essentially. So yeah, that's awesome what you're saying about the risks there.
Absolutely.
So I think this is really important, because this is in my 66 unit deal, we did something really similar. And, you know, as far as I know, the feedback anyway was, you know, the webinar was good, and doing everything for the first time. I think it's so important to have, you know, to go through those risks, talk about these things with investors and make sure that they know about the deal, know about the risks, know about the market, everything you're saying though. So that's really important. I think it comes back to the whole, like a confused mind is just going to say no. So the more you can fill in the blanks for them and talk about the good and like the potential bads, the better it's going to make them feel. And, you know, this is for you when you're investing too. Like these are good questions to ask if you're going to be a passive investor as well. So yeah, I think that's good. What advice would you give to someone that's looking to get started in one of these asset classes? We kind of touched on it there, but
I would say the first and foremost step would be to educate yourself. Read books, listen to podcasts, talk to other people. Again, it comes down to networking. Speak with other people that have been investing actively or passively in a particular asset class or in multiple asset classes that you're interested in. But it's very important to understand the type of investment you're going into and what may or may not happen and all the risks associated with it. So that when you're deciding to finally invest, you're making an educated decision, not just some sort of guess when you're investing in it.
Yeah, that's good. I think as you get in more specifically to a certain asset class, you know, to drill deeper even on this, like when you're looking at a specific opportunity, what are those differences for like the assisted living and self-storage, like things that people should be educating on? Are they looking to have to like hire employees to be here? Or is it putting, you know, is there property management for assets like this? Like, how do you go about filling in those blanks if somebody's, you know, coming from a multifamily background looking into these different assets?
Yeah, so Blake, great question. As you mentioned, self-storage and assisted living are more of businesses. So making sure that the management company that you hire to manage these businesses is the company that has experience within that asset class and within the geographic location and has significant presence in that geographic location, so that they're not just coming for your particular property and everything else is many miles away. And then speak with them, ask them how they do business, because you would need to interview these management companies, ask how they do business, ask about the frequency of communications, the reporting system, the outcomes that they're expecting, and see if it matches your plans and interests. And I would definitely say interview at least 3 to 5 management companies before deciding which one to work with as an operator. And as a passive investor, again, when reviewing the deal, you have to understand what you're getting yourself into, and you have to ask the right questions. And I actually have a list of questions that I compiled for passive investors that they can ask operators. So if anyone is interested, I can send you the link and you can share with your audience.
Yeah, definitely. We'll put that in the show notes, because I think stuff like that's really important, because you don't know what you don't know, right? And if you're getting into one of these investment opportunities, having a guide like that would be really helpful. So yeah, we'll put that in the show notes if you guys want to go download that.
Yeah, and I also have another educational piece on diversification in general. It's called Portfolio Management 101. So again, I can give you the link for those that are interested to check it out and read up on that.
Yeah, that's great. So essentially, it sounds like when you get into these different asset classes, the most important thing is, if you're the operator, learn about the asset management piece, essentially, because that's where the variance is going to come in. If you hire the wrong property management company or don't know the differences and think it's just like multifamily, you get yourself in trouble pretty quick. So just get well-rounded and versed in the asset management piece. Even if you're not going to do the property manager, somebody's got to manage the property manager, and as the owner, that'd be you or somebody on your team.
Absolutely. Learn the business as much as you can, because if you don't know something about the business, then you may not be asking your property management company the right question. So that's important.
Yeah, I like too how you got the the question list and everything for the passive investor side too, because then you can really provide value to both groups of people. Because some people might want to look into how to operate one of these, but invest passively first and kind of get the feel for it, get the reports from the operator and just see how the whole thing works before going and getting into it. And I think that's a great route as well. So for you, Alina, like, what are the skills that you've built over the years that have allowed you to be most successful in this kind of alternative commercial space?
Yeah, no, good question. Like many months ago, I think I was still in college at the time, I read Dale Carnegie's book, How to Win Friends and Influence People.
We talked about that one a couple of times on this show.
Yeah, I mean, it was a simple book, but it resonated with me so much. I was impressed by how this guy put together such simple, rudimentary, essentially concepts into one book, and it all looked like common sense. But when all put together, it looked like a science that you had to follow. He, some of the things that Dale Carnegie was mentioning. When you have a conversation with someone, listen to that person, pay attention, make it into conversation, and ask them follow-up questions to show that you're listening. Look them in the eyes. Don't look away. If you're at a networking event, don't scan the room while talking to this person. So, those things are basic, but it's important nowadays more than ever. I mean, some of the networking events that I went to, sometimes I see people supposedly talking to you, then they check in their messages.
Yeah, am talking to you like this? Like,
scanning the room.
Looking at you from the side. It's like,
or they see someone they know, and oh, hey, how you doing? And they forget they were talking to you all together. I'm like, wow, that's kind of rude.
Yeah, that little stuff in conversation makes a huge difference, especially if it's somebody you want to show respect to, or maybe partner with, whatever, get information from. They're not going to be very welcoming if you're being rude.
Yeah. So the point I'm trying to bring across is it's all built on a relationship. So put an effort into build relationship, regardless whether the person is someone who is going to invest with you or it's an operator you want to work with. You just never know how it's going to turn out. I'm a big believer of building relationship with everyone, especially if people are willing and interested in speaking with you. Then I always am interested in meeting other people, listening to their fascinating stories. So I think it's huge.
That's so good. I'm glad you're hitting this point home, because we've talked about it multiple times, and it seems like that's really been something that sets you apart, is how you communicate with people, make people feel educated and respected, and build that trust with people. And that goes so far, for raising capital, for doing deals, for helping people take charge of their finances. That's huge, that trust you build. So that's good. That's really good. I kind of want to do something off the cuff here and talk about one of these deals specifically. I think it would help to, help the listeners to kind of picture or visualize how one of these deals work, because if they're listening to this podcast, they probably have a good idea of, how to invest in multifamily, or, at least kind of the basics of it. But I think as, put more tools in their tool belt would be seeing how other deals work. So can we, I don't know, give us a random deal that you've done or currently doing, and then we can kind of go from there.
Yeah, well, I can't talk about anything current, but in terms of the past deals, so when I'm looking at the project, I wish you could bring like an offering memorandum in front of us, any offering memorandum. I could throw,
Oh man, that would be so good. Yeah, we're gonna have to do that one time and
I
just
can throw 20,
I'll
30
have to watch it on
in a
YouTube.
minute at
But yeah,
you.
just go through it.
Essentially, when you're looking at the offering memorandum, what you need to remember is there are two sets of things. There are quantitative things and there are qualitative things, and you have to tie them together. And what it means is, let's say the project says, oh, you're going to get a 15% IRR. So what? That IRR alone is pointless. It means absolutely nothing.
Yeah.
You have to look at the cash on cash, you have to look at the equity multiple, you have to look at the strategy. And then when you look at the strategy, look at the underwriting presented. Is the operator, let's say it's an apartment complex, is the operator saying, oh, I'm going to come in, we'll start increasing rents from day one, we'll have 5% vacancy, and our property is going to generate 10% more than last year, and the expenses are only going to grow by 2%. I mean, we're living through the pandemic that no one ever heard of before, and no one ever experienced the times like now. There is no way you can project. Maybe your vacancy will be 5%, and hopefully that's the case, but there's no way you want to project at that, and there's no way
you
want to raise
definitely want to look at like the economic vacancy, because it could be physically occupied at like 95%, but maybe another 10% of those people are behind on rent or not paying. And that's what I've seen underwriting deals recently, is that the economic vacancy is the kicker, right? They're saying, oh, it's only 5% vacant. It's like, no, it's not, Mr. Broker. Like, look at all this rent they're not collecting. And you see those things by digging deeper into the,
and there are many factors like that. It's the area, it's the type of asset, it's where you're going. Is it workforce housing? Is it B plus area, or is it better? So all of that is impacting the underwriting and the strategy. Look at the strategy as well. Are you trying to raise rents above the market, or are you in the middle? What is the overall vacancy in the area? Is it 5, 10, 15%? Are you going to be able to fill in the units? What is the break-even points? Look at the stress test. Is the property passing the stress test component? All of that has to be asked, has to be discussed, and ideally presented at the webinar by the operators themselves.
Yep. Yeah, that's all good stuff. What was the last deal that you did that you did all this on, that maybe we could pick out some nuggets from?
Oh boy. It's been a while, and I typically don't memorize the numbers.
Okay. We can talk about strategies. Like if it was self-storage and the idea was to go in and like add additional units or raise rents or something like that. Like what are these?
It was an apartment complex where we added value. It was in Georgia. Again, it was on all the properties from like mid-70s, and it hasn't been renovated for about, I want to say 10, 15 years. So there was definitely meat on the bone there, and we were going to come in, renovate the units. Obviously, better tenants there. There was also the need to add the pet park in the area, because a lot of owners were bringing pets.
Yeah,
so we decided
parks are big right now. People love their pets. All the people buying COVID pets because they're stuck at home. They need.
Well, exactly. Especially if you live in a warmer climate and you want to spend a lot of time outside, and you need to go outside because you spend so much time in front of the computer. Yeah. So that was awesome. For the
Okay. So you bought this. The goal was to go in, raise rents, fill vacancy, and do some upgrades in the units, and then add this bark park. Anything else strategy wise that led to this being a good deal and one that you pursued?
I mean, renovating units, changing the kitchens, changing the bathrooms, rents were under market. So there was an opportunity. Plus, this was one of the many other assets that the operator had in the area. So it wasn't brand new to them. They knew the area very well. They've used the property management company before. So it was the same property management company that's used before. So it was essentially a repeat strategy for a brand new.
Those are the best. You just plug and play. It's
exactly.
It's muscles you've already worked out. You can do the reps easy. It's not as heavy as a lift, if you will. So that's good. It sounds like a good not stereotypical, but a good value add, like a good value add deal, that there was a lot of meat on the bone. You guys went in, purchased it from the owner, did some renovations, did some upgrades, made it a lot better. And then tenants were willing to pay more for those upgraded units. So, and then because of that, your NOI goes up and you get a lot of value because that's where
hopefully
your money's made.
Go down as well. Yeah.
That NOI up. I love it. Awesome. Well, with that was just off the cuff. I'm glad we, dug in a little bit and just see for people to see the strategy behind these deals and things to look for when you're underwriting deals or looking for opportunities, whatever it is. But now with that, let's get into the Fortune 5. This is the 5 questions I ask every investor, every episode here. So
Fortune 5.
Just to kick it off, what's the biggest thing that has contributed to your success?
Commitment, committing to something and making sure that I do what I promised myself to do.
That's a strong answer. I like that. Commitment. Said it without a flinch either. I like it.
Well, remember, I'm an immigrant, so I went through a lot early in my career. So after that, the sky's the limit.
Yeah. I wish we had more time to get into that. But yeah, I think overcoming that adversity, it pays off so much of getting through it. But
it was huge. It was huge, believe me. But it was definitely a tough experience. I wouldn't want to wish on anyone.
But the commitment got you through it. That's good to see. So number 2 here, what has been your biggest mistake so far that's turned into a learning lesson?
Not investing in real estate a lot early. And I tell everyone, every chance I get to speak to kids in school or college students, I always say, think about investing, look into investing as early as possible.
Yeah, that's such a good answer. I knew I was chomping at the bit to graduate from college and buy my first deal. And I think the earlier people get on it, you got time to compound your success and learn from your failures. And that's a really good answer. It's never too late to start though, because the sooner the better. The best time to buy real estate is now. What's that quote? Don't wait to buy real estate and wait. Number 3 here. What's your favorite book you'd recommend to someone starting out?
The Richest Man in Babylon. I love that book by Richard Clemson.
I have not read that one yet. I gotta put that on my list.
Let me tell you something, Blake. The book is over 100 years old, and whatever he talks about in that book is still so valid today that it's incredible.
Or it's like a fable, right? It's written as like a story.
Exactly. Yeah, it's not exactly in straight English, but you'll understand every piece of it. It's incredible. I love it.
All right, it's going on my list right now. Richest Man in Babylon. So, Alina, what do you like to do outside of real estate?
We like to play cash flow game as a family. We started last year. My son got it as a gift for his birthday, and besides reading, reached that for that and. Making my kids read the teenage version of that book. We're now
thinking about assets early.
Exactly. We're now playing the Rich Dad cash flow game. That's Robert Kiyosaki cash flow game.
That's awesome. I've never played it. Is it like Monopoly on steroids?
It's different because it forces you to learn accounting. And it forces you to learn accounting in a fun way. I learned accounting in a boring way.
You should just play the cash flow game.
Yeah, I should have just played cash flow game instead of going to college to get my bachelor's.
There you go. Yeah, that's good. Yeah, I'll have to try that out. I heard they have like local tournaments and stuff and like groups that
They do, and there's a virtual version. We have both played the board game, at home, but there's a virtual version that you can play with other people.
Yeah, board games are like a dying art, aren't they? Like I'm glad to see somebody still doing it because I remember growing up like always playing board games. Like,
well, not when you were in a pandemic, stuck at home.
Yeah, you can only play so much Xbox, right? So you pull out the board games, take it back. Yeah, I like that. Awesome, Alina. This has been really good. So, where can people find out more about you or connect with you?
They can find me on my website, SAMO Financial, LinkedIn, Facebook, Instagram, and now I'm on Clubhouse. So Alina Trigub on Clubhouse. Check me out.
Clubhouse, I just downloaded it. I haven't used it yet. I logged in one time and I closed the app and it just kept talking. So I was like, it scared me off. I was like, how do I get out of this?
It's for those multitaskers, whatever you want to do. If you want to run outside or walk or driving, you just open the Clubhouse and start listening to someone.
That's good. I might have to try it while I'm working out, like in replace of a podcast or something. That's good stuff. Well, awesome. Alina, thanks so much for coming on the show. This has been awesome. Guys, go find her and look out for her passive investor guide in the show notes. Alina, thanks so much for coming.
My pleasure, Blake.
All right. We're out of here. Hey, thanks for listening. If you like the show, if you found value in it, please go to iTunes and leave a rating and review. And if you want to check out more on your multifamily journey, go to multifamilyjourney.com where you can get free resources to start your journey and figure out your path. That's multifamilyjourney.com. But more importantly, go take action today towards your financial future. See you next time.